I'm Doug McKenzie and welcome to another episode of the Insurtech Show. On this episode, we explore speed to market, just how important it is and what level of speed customers expect in today's digital age. First up, we sit down with Zurich, Atradius and Vlot to talk about customer data, how they access larger amounts of data to help create opportunities for far more tailored experiences.
Without doubt, there's an increasing amount of data, whether that's externally obtainable data or data from Internet of Things, for example. There is an increasing amount of data. And absolutely, we want to use that data to improve a customer experience. And personalization or hyper-personalization is very much, we know that's what customers are looking for. So I don't think there's a particular source of data per se that is going to solve this problem, but absolutely the increasing amount of data provides opportunities, provide great customer experiences. The real trick with this is to work out which bits of data the customer wants at what time, served up through what medium, at what level of frequency. And of course, we need to be really, really mindful of some of the regulations around customer data. At Zurich, it's hugely important to us. The customer's data and the customer's protection is core to our business. So yes, we want to be able to create those services. Yes, we think we can create those services, but it's about timeliness of data, when you give it to them, how you give it to them, and also respecting the regulations and that is the customer's data.
API is very critical in this sense, and even maybe the most competitive element around technology for credit insurance, because that offers opportunities to bring seamless information transfer from a customers to a insurer. So a lot of, as indicated, a lot of iterations between the customer are still in an online logic. They're sitting a credit manager, typing in an application, typing in a non-payment declaration, and these APIs will more or less make that all obsolete. And that helps obviously that the whole process around credit management on our side, but also more specific on the customer side, will be much easier.
With the increased amount of customer data now available, what can Vlot do to help provide, tailored solutions for this?
Yes, there's a lot of new data sources out there. That's true. We, at least in Switzerland, we've talked to consumers, to customers, to our end users, and there is a certain reluctancy of having an insurance company scan your Facebook, your LinkedIn, your Twitter, whatever account you would attach or tap into. So we've kept away from that because we think there is enough data out there that we can use in a good way for the customer without having to tap into new sources. And some of these things, as I mentioned, is transactional data from a bank, customer behavior. There's enough. I think there's enough data out there, to be honest with you. And custom tailored products is something which is a matter of putting those data points together without the customer actually noticing that you're doing a lot of work in the background and it's a machine doing the work, and obviously we have to program that. But I think that is the future of insurance, that the customer doesn't have to give all the information about himself, that we know a lot about him already, or we pull those data sources together. And then thanks to the technology, we don't have to go through a catalog of like, okay, this is life insurance, this covers this for that much. It's more like, okay, this customer's in this situation today, given his household and his income, this is the right coverage for him. And as soon as something changes, we adjust it. So the technology gives us the possibility to be so quick in changing and adapting to the customer's needs, which today is simply not possible, even if you have a big workforce. And it's not efficient. And the margin obviously goes down, and using the technology, we think we can solve a lot of these problems.
So, with all this data at hand, the next big conversation becomes speed to market. Is it something that larger insurance companies are looking to improve on? And is there any way of accomplishing this right now?
Again, for the question around speed to market, it is increasingly important. In everyday lives, everything is becoming more always on demand. The expectation of the customer means the insurer can't wait any longer. So speed to market is increasingly important. It has been for some time, and that's not going away anytime soon. Organisations that can build products and services in a short amount of time responding to customers' demands are ultimately going to be the ones that win. So undoubtedly, the Insurtechs can give us that edge in terms of being able to build technology and get it to market. The challenges for large insurers is being able to move at pace through your own organisation. Many organisations are not set up in a way in which you can release products or services to market in weeks or months. There's a whole history of projects being developed in months and years. So the trick is really for the insurance industry to work out how they can break initiatives or ideas down into their component parts and release the most valuable thing early. And they need to get into the habit of doing that, because the one size fits all or all singing, all dancing products, they just take too long to build, and you've missed the crest of the wave.
So we're really fast, and that's where we kind of, that's the difficulty, because you're talking and working with slower incumbents, which they're just naturally slow by the way they are constructed and the amount of people that work there and have to decide. And that is a big challenge. Now, as I said, the insurance market is not in a huge hurry. So what we're doing is we're looking for insurance companies and banks and other financial institutions that have a proven track record of innovating their own processes, of picking up those new customer needs on the market and bringing that in line with their own strategy. And of course, it's a stretch. That's where all these accelerators come in and these head of digital transformation guys. So we've talked to so many C-level executives, both in banks, in software providers, and in insurances and other financial institutions. And that's the biggest issue, is having a match between digital transformation, between the executives and then the actual departments that are affected by your technology. And bringing that in line is, as I said, is what we try to do with accelerators, where we have matchmaking, where we get the help of these accelerator specialists to bring us together with institutions and insurances or banks that want to innovate. But it's difficult, and it's not it's not an iPhone we're selling, right? We're selling, or we're covering the topic of life insurance, and that's not the most attractive topic on top. And you can't touch insurance, right? It's a promise, and who wants to buy a promise, like online? I mean, if I order an iPhone, I get an iPhone, right? And with insurances, you get, today you get a slip of paper, and with our product, you actually get a login, and then you can see that you're covered. So combine all of those, and it slows down the process to bring things to market. But we're very positive, and we already have a lot of signals from key players in the market that they have realized that it's time to move. It's time to embrace that digital transformation, not just the words, and not just the head of transformation guys that are putting into things into place, but that it's kind of trickling down into the departments and into the way things are working within an insurance company.
Speed is only one element. Quality and reliability is the more relevant element. And don't forget that we are in the moment already having 10,000 credit limit applications per day decided worldwide. We have in the moment speed of service of more than 70%. That means every 7 of 10 decisions are already decided automatically. So there is obviously room to improve, but this is something which we get from the market, which is really sufficient. But on the project side, the innovation part is obviously relevant, but I feel that also here with our methodology, we are quite ahead of the game.
So obviously being a global company, time to market, and especially the industry you're in, might be a bit different to, say, a smaller agile fintech. Can you tell us, what are Atradius's views on that?
Time to market is in this sense in the essence of our core proposition. So we have to decide very quickly to the customers that they can trade. That means as well our automatic hit rate has to be extremely high. That means time to market in this sense is very relevant. But I agree that, let's say, project approaches with sprint and agile methodology has less of an importance, like, for example, in a fintech logic. Nevertheless, we're also using this technology, and we are also in the moment working with several insurtechs around this approach, and in this sense it's relevant for us. But the more relevant part is really the quality and the reliability of our data.
Our process starts with a clear analysis of the customer situation. I would say that's a key fact of what Vlot does is we don't jump into the room and say, hey, here's your policy, or here's your application, sign here, please. We come in and say, listen, customer, we have an online tool to help you find out what you actually need. Because what we noticed, a lot of these insurance companies, be it traditional insurances or insurtechs that offer life insurance online, it's like you enter the website and the first question is, please enter the amount you would like to insure here. And the customer is like, okay, I don't know how much. And then the next question is, how long do you want the cover for? And the customer again goes, I don't know. You know, I might get married in 3 years. I might have kids in 5. I might buy a house. I might buy it here in Switzerland, or it might be in the UK. You just don't know, right? So I think one of the key things we do to start off with is the analysis. Now, talking about the time it takes, if you have 1 or 2 papers that you get in Switzerland with a couple of digits on there that we need for the analysis, which is a standardized process, it'll take you about 4 to 5 minutes without much brain work on your side to get the full analysis, social security systems, all the benefits that you're going to get, the analysis of your household with this AI component that I mentioned, the amount of coverage that we would actually recommend you to get based on factors that we also list, that the customer knows what we're taking into account, and then the premium, your personal premium before underwriting of what the cover is going to cost. So I'd say 4 to 5 minutes at the maximum. And this is a direct to consumer approach. So you're entering our website and we don't know who you are. Now, if you put that into a process where we're talking with a bank, which is using our offering, they have 90% of this data is already in their system. So the customer entering, for example, his e-banking login, the system can pull this data together and doesn't have to ask all of these questions. And that's why we think insurance belongs into the context, for example, of a bank, is because the customer doesn't want to enter his data, a dozen times per day. It's all sitting there, so we're trying to tap into those data sources with the allowance of the customer, etc., and taking it from there. So actually, one of our projects is having an assumption of his situation already there for him without having to enter any sort of data. So that will take 0 seconds, right? So he enters the e-banking, it's already sitting there. And yeah, entering your mortgage figures and that kind of stuff, it just takes a couple of seconds or minutes. And then you have that custom tailored coverage and premium at the same time, based on all the input that we got either through the customer or through the data streams that we can tap into. And then from there, it depends on the product you're taking. You have to run through a certain application process. That usually takes about another 4 to 5 minutes. So in theory, if you answer all the questions in a certain way, because the questionnaires sometimes get a bit longer depending on what question you answer with yes and no, you would have about 5 to 10 minutes in total to get a life insurance coverage, but not only the coverage, but also the analysis. And we think that the analysis is just as important as the coverage itself.
Finally, we take a look at collaboration. Are insurance companies looking to collaborate? And what are the potential benefits of partnering? We also find out where Vlot sees the future of the industry.
So for us at Zurich, we are by design, we're not a lab. So we don't take, as much as I'd like to for the fun of it, we don't take interesting technology, sew it together and create something that looks cool. At Zurich, our innovation foundry is a facilitation function. So we will encourage and we can tease ideas out of the business, or problem areas. We tend to start with problem areas, tease ideas out of the business, and we will facilitate the growth of that idea, or even failing that idea fast, which is often as successful as progressing it with no real benefits in hand. Once we get into the process of an idea, we tend not to be led by the technology, but very, very quickly the technology tends to become what sort of technology are we going to use to progress the idea. And at that point, we have a local DevOps function, which can satisfy some of the technology demands that we have, but increasingly, and we've got lots of evidence and use cases, we want to work with the Insurtech community. As I previously said, these guys have got great technology and are able to move fast. Sometimes they don't have the customer base. So I think when you put our customer base and our insight to the industry with an organization that can produce great technology, we're producing great results.
What's the key thing that Atradius would look for from an Insurtech? Because obviously some of the issues with the smaller companies is, scaling their propositions is a difficult task. So what would you say to the smaller companies?
I mean, what we would focus on to smaller companies is very much, can they help us to enabling trade for our customers? And then ideally globally. So that's what is very much our focus. Our data helps them to provide specific services. And as long as, let's say, the proposition of a fintech can help globally, then I think we're in the game.
It's difficult to predict the future, especially in this very fast-turning digital age where I would say we're entering. We haven't even scratched the surface of the possibilities. I think there will be a lot of applications using artificial intelligence, using blockchain, using all these, technologies that everybody's throwing around. But I don't think that that's going to be the only thing rocking the insurance industry in future. I think it's about transparency, it's about fairness, it's about custom tailored products. It will be hopefully a lot more digital in terms of I don't have to touch paperwork anymore, and here in Switzerland everything is still paper. So we have a lot to catch up also against countries like the UK or Germany, for example. They are already a lot further. But I guess it's a big question out there. I mean, who's going to survive? And I don't think that insurtechs have the power to just roll over the market and say, we don't need the incumbents anymore. And having said that, with Vlot, we're trying to cooperate with big carriers because we think that the combination of the two, a big and long history with lots of data that the insurances have today, which we as insurtechs just don't have, a huge customer base of paying customers at the moment, and then sprinkle or add the technology, as we go. You don't have to do it all in one go, but start optimizing your processes internally and externally. And I personally believe it will be a combination of the two. And I don't think that there will be an insurtech, coming out of the ground as a unicorn, which will rock the whole world on insurance. And I don't think personally, I don't think it will also be one of the Googles, Facebooks, Amazons of this world, because I think there's risks involved here. I mean, we're talking big amounts of money which could destroy a company in terms of hurricanes or climate changes. It impacts a lot, but also globalization with movements of people traveling and working in different areas. There's just so much change there, and I think the combination of incumbents with insurtechs will most probably be the way that things will pan out in the next 5 to 10 years. Don't call me in 10 years and say that I was totally wrong. I put a disclaimer on that, but I think it will be the combination.
That's it for us. Thanks for watching. Be sure to join us on the next episode of the Insurtech Show.